Right.
So there's no denying that 2008, and it's so young, isn't it, has been quite a rough year for the markets.
11% down in just the past 5 trading days, with the S&P 500 down 5.3% in the past 5 days. Been the worst start to a year ever. All major markets in correction mode, meaning they're down more than 10% from the recent highs.
So where can investors find a little shelter from this storm? Our Fox panel is here to give us their safe haven ideas for you. We have independent trader Eric Bowling, Fox Business's own Liz McDonald, Joran Brook from the Ayn Rand Institute, and Peter Schiff, author of Crash Proof. Good to have all of you. I'm dying to know what the ideas are. Eric, you start. Where do I put my money in this atmosphere?
Well, how many times have I been on here in the last few months? Quite a few. I'm going to bring it up again. People are probably tired of seeing it.
Peter's not.
But we still are making new all-time highs in gold, in silver this week, in some of the, not the industrial, the precious metals.
Sure.
Not the industrials, not the basic, but the precious metals, because they have things like weak dollar, which Peter and I are going to get into later. They also have geopolitics involved. And as currencies, as people move into different currencies, they realize that the one currency that's going to retain value is gold and silver.
ETFs?
GLD is the ETF that anyone can trade. If you have a stock account, you go to your stockbroker and say, I want GLD, and basically what you're doing, you're buying a stock share of a fund that holds gold bullion.
And you have some of that.
And I have some of that, and I do.
All right. Elizabeth, what if you don't want to go for the hard
Yeah, what if you don't want to go?
gold?
You know, it does feel like the wheels are coming off the stock market, but there are some, stocks you may want to take a look at. You look at the oil services sector, and the oil drillers up 45% last year. I'm looking at Weatherford International. They're a great play in the Caspian Sea, the Middle East. A lot of insider buying at the company as well. This is a play on oil, of course. Oil, it moves up and down. The stock prices in this sector tend to move in tandem with oil prices. But hey, this company is going like gangbusters. I've been looking. It's also cheap. It's trades at 22, 23 times earnings. I mean, it takes $23 to buy a bucket.
By the way, you got an oil trader right next to you. Is that a good pick?
Not only it's a great pick, because a lot of these oil service stocks are booked years in advance. So they're no matter what happens to the price of oil going forward, they're booked 2 years down the road. They're going to have their business in line.
Lizzie, explain insider buying and why that's significant to an average person out there watching.
Right. In other words, directors and officers at the company
think it's great,
and they're putting their own skin in the game. And Eric is right. I mean, the inventory of what the jobs this company has in store, they have a backlog of work, and so that's what I like. It's putting the floor under the revenues. And yes, the insiders there are liking the stock enough. They made a ton of money buying the stock last year. I think it's still going to perform pretty well.
We'll
on a
talk about somebody who puts
basis.
their own skin in the game. Peter, you not only advocate gold, you put a lot of your own money into gold. What else are you putting money in?
Well, yeah, the other safe haven that I've been helping my clients is to accumulate non-U.S. dollar assets. You want to own companies outside the United States that earn their revenues outside the United States, that have very little to do with our economy and have everything to do with the growing wealth and rising standard of livings of the rest of the world. But, I think it's important to point out when it comes to safe havens that what a lot of people think of as a safe haven, treasury bonds, muni bonds, CDs, none of those assets are safe. The U.S. dollar is going to lose a substantial amount of its value.
Tell us what is safe. What do you like?
Well, yeah, but anybody that's in those assets is going to take a huge loss in purchasing power. So you got to look outside the United States. You got to buy, Eric already talked about gold. You can buy gold bullion. You can buy silver, other commodities. And if you want to buy bonds, you can buy them. But buy them in Germany, buy them in Australia, buy them in Canada, buy them in Switzerland, or don't buy them in America. And I prefer equities. I like, I buy a lot of utilities, a lot of refineries, a lot of pipelines, a lot of agricultural companies, farms, all sorts of income-generating assets. I'm able to get for my clients, 7-8% dividend yields on conservative portfolios of foreign stocks. And so the short-term volatility doesn't bother you when you're getting significant income from your assets, especially when that income is in currencies that are rising as the dollar falls.
All right, Joran, what do you say?
Well, I'm not a stock picker, as you know, but I worry a little bit about gold and some of these other assets. If you were sitting in 1980, gold at 800 plus, it looked like a good investment then. Inflation was high.
No, it didn't.
I'm afraid gold. It's already. Inflation is already priced in. It might not be. It might go to 1,000. It might go to 1,200. But I think there's real risk in buying gold.
Remember, gold started in 1970 at $35 an ounce. The fact that it was at 800 at the end of that reign, that was a tip of the bubble. Buying gold at 800 in 1990 was like buying the NASDAQ at 5,000 and 2,000. We are still early in this game.
Hold on, Eric, go ahead.
Well, that's the question. The question is, are we early in the game or aren't we?
Eric, go ahead.
If you adjust that $850 price for inflation, as you know, it's somewhere around $2,100 or $2,200
gold will
per
get
ounce.
there.
It can still go a lot higher.
Sure, it might go to $5,000 or $10,000, in which case it would be expensive, just like it was in 1980. Don't wait for that. Don't wait for the peak of a bubble. Buy it now. I mean, it's not the rock bottom, but we're closer to the bottom than the top.
These guys put together a chart for me. This is fantastic. This is a chart, and Peter, you'll appreciate this as well. This is gold in euro terms. So not only has it appreciated because of the dollar weakness, it's appreciating against every other currency. One of the strongest currencies in the world is the euro. Look at the gold. I mean, and that chart just shows where it stopped recently.
Because all governments are creating inflation. So if you want to protect yourself from inflation, you buy gold.
Hold on,
you're missing a backstory. I think Eric is right. A lot of middle class people, the growing middle class in India and China means that these people are buying jewelry. You can't discount the fact it is so. You're absolutely wrong. The growth of gold prices in India alone, I mean, that's putting a nice floor under the gold price. And Eric is absolutely right. It's way off its inflation-adjusted highs. I think it's north of 2,300. So yeah, I in fact like gold, and I made a killing of this little gold fund.
Let me ask Peter this question. Peter, the price of gold really spiked solidly above 800 after the death of Benazir Bhutto. That clearly had some effect because a lot of Asians, particularly in Pakistan and India, prefer gold as a hedge against uncertainty.
Look, that's just noise. It's a bull market. It's going to go up. You guys can try to find reasons to explain any kind of daily move. But basically what's happening...
This wasn't a daily move. This was the week after Benazir Bhutto was assassinated. It went up way above 800.
Gold would have gone up even if he wasn't assassinated.
You're preaching to the choir, Peter. I mean, Liz agrees and Eric agrees, certainly.
What I'm saying is it spiked last night when Hillary won the primary. She made a speech. I'm telling you, if you watch the gold chart while she was speaking,
this morning. What difference does it make? Look, the reason gold is going up is because people are losing confidence in the alternatives, which are paper currencies.
Peter, you get the last word. Now, what if you're a more passive investor? What should you do then?
What should you worry about in this market turmoil when it comes to your 401k? We'll tell you if it's time to tinker or sit tight. So as the election year heats up, we're going to hear a lot of ideas about health care in our country.
One of our Fox panelists says almost all candidates, Republican and Democrat, are on the wrong side of the issue.
In the latest issue of Forbes magazine, Yoron Brook of the Ayn Rand Institute, frequent guest here, writes that the real problem is Americans have come to view health care as a fundamental right. Says it's not. He joins us now to explain that view and debate it with the rest of our panel, along with Nicole Ridgway of smartmoney.com. She's a senior editor. All right, Yoron, we'll take you on here. What do you mean that it is not a fundamental right?
Well, I don't think you can have a right to a good or product or service that somebody else provides. If that were true, then that would make the provider, in a sense, your slave, right? I mean, I have a right to health care. Give it to me. I have a right to food. Give it to me. I have a right to housing. Give it to me. You don't have a right to demand that somebody else give you stuff. Rights, the right to life, liberty, and the pursuit of happiness are freedoms. What they mean is you have a right to go out there and pursue life to the best of your ability. You have a right to make a living and go and negotiate with a doctor or hospital to get the best treatments that you can. But you have to pay for it. Nobody else has an obligation to pay for your health care, for your food, for your housing. It's your responsibility to actually live, to actually pursue life, liberty, and happiness.
Yeah, but Liz, you know, there are constitutional rights, which are one thing, and then there's something sort of in that hazy world called entitlements.
Yes, that's
and in 1965, we had the beginning of Medicaid and Medicare, where health, or at least a portion of our health costs, were considered an entitlement that the government would take care of.
I hear what you're saying. You know, yes, and at that time, you also have Blue Cross Blue Shield who came in to power because they basically shoved off the uninsured onto the government, meaning Medicare, right? And that's how Blue Cross started making their money. But you know, when I hear these arguments, I want to invoke my right to be protected from cruel and unusual punishment with the torture logic. Look, the government has a right not only to tax us to death and beyond, but now we also have the right to carry concealed Uzis. The government, local governments also have the right to seize property for economic projects. I'm saying, what are our priorities here? Why don't we have health care coverage for sick kids if they need an X-ray to get a tumor, diagnosed?
So you're saying it is a right. Healthcare is a right.
No, you're talking about a right means the legitimate.
I just want to make sure I understand where you stand on the issue.
I'm going to say the right. You're talking about rights means the legitimate power of government to do what? I say expand that state health insurance, a Schiff program. $40 billion over 10 years is a drop in the bucket compared to the annual report spending and the rat holes we've thrown money down in Iraq. I say no. I have no problem with expanding money for that.
Eric, what do you think? Is it a right, a fundamental right of everybody out there watching right now to have universal health care provided by the government?
Liz, I've read countless articles on this. I rack my brain to figure out where I am on this, and I can't figure it out. You have a right to make money on it, which this is you know what? This is all I can do. I can bring you some stock tickers that I think no matter who wins this election, you will profit from. I can't tell you, do I think universal health care is a right or it's not? I don't know. I think it's too expensive. There are things like litigation that's going to continuously drive costs up. But that being said, if you own things like Merck, if you own things like Stryker, the population is aging. They're buying orthopedics. They're buying analgesics. Is that right? Analgesics. They're buying things, and that's going to continue.
Some now too.
Doesn't matter if it's Hillary. Doesn't matter if it's McCain. It doesn't matter who it is. They're going to continue to buy. And that's the only right I can really claim.
Stryker makes a lot of the hospital beds. If you've ever been in a hospital and they go up and down, Stryker makes that equipment. Yeah. All right. So Eric brings us back to how you make money on all of this. But Yoran, here's what I worry about, and it would seem to fall on your side of it. When you make it universal and you get the government involved, you kill the quality sometimes. And my father was a surgeon, and he felt that like the insurance companies getting involved killed the quality of a lot of medical health care out there.
Well, there's no question. And the reason you're killing the quality is what you're doing is violating the rights for doctors in order to establish the universal health care. You're capping how much profit they can make. And we have a right to make a profit. And by defending that right to make a profit, what are we doing? We're improving quality. You increase competition. You improve quality of service. You'll see costs go down, not costs go up. The more we apply capitalism in the free market to healthcare, just like any other industry, the higher the quality, the lower the costs will be. You know, we have cheaper food today and more food today because the government stayed out of the food industry. The more the government gets into the food industry, the higher the cost of food. And the lower the quality
well,
is
and
going
also,
to be.
Peter Schiff, the more the government gets involved in things, the more corruption we have, the more inefficiency we have. The Medicare program is $300 billion. About $50 billion a year is either wasted or fraudulently charged in Medicare. So you got to expect a lot of that if you want to expand that to $2.2 trillion.
Yeah, you always
underestimate it by a big shot.
All right, Peter, go ahead.
Yoran is 100% correct. You know, whenever the government gets involved, you're going to have this. Look at the cost of making a phone call. Look at how much that has gone down over the years. Compare that with the cost of mailing a letter. Anything the government does is inefficient. You know, back before we had Medicare, doctors actually made house calls. You can't get that kind of service anymore. And my father used to tell me the story when they first had Medicare, and he had to help his mother figure it out. All of a sudden, her doctor bills went through the roof because the minute Medicare was involved, doctors started charging a lot more money. And the same thing with education. I mean, we can't afford to go to college. You can't afford medical care because the government is involved in those industries, driving up prices and not letting the free market drive them down.
Liz, how do you make it work if the government were to help out people who can't help themselves? Let's be compassionate here.
That's a great question. And look, I'm not saying, look, you see how the government runs the Department of Motor Vehicle. We think that the government's going to do a good job taking care of health care. But you guys, you think that the private sector is going like gangbusters, doing a good job of it? Look at the corruption in the insurance industry. Look how much inflation it costs.
Liz, it's a terrible system, but it's a lot better than the alternative.
I'm agreeing with that. I'm saying there's a middle ground to be found.
Go ahead.
There is a middle ground that needs to be found. I mean, if you go to a fully free market system, you're going to end up having sort of like the McDonald's of coverage for people who don't have a lot of money to pay for it. And then what about the elderly? How are they going to be able to pay for it?
We had a great health care system before we had Medicare.
Yeah, but the elderly get poorer, Peter.
And the way you deal with that is charity.
Excuse me?
You deal with the people who can't afford it with charity. You don't deal it by forcing some people to pay for the health care for others. It's not the role of government.
Gang, we got to wrap it up
wealth
at
in
that.
way.
We'll be right back. Stay tuned. Very much. Well, would the president's stimulus plan work, or should the government get out of the way and let the markets work themselves out?
Let's go back to our Fox panel to debate it. Nicole Ridgway, should the government get involved and get this kind of economic stimulus package going, or just leave it all to the markets?
I think that they're going to have to do something to just get things going. You know, I would want them to be a little bit careful about the interest rate cuts, not cutting too much. I don't think it's going to have that much more of an impact than we've already had. But giving the tax rebates may stimulate a little bit of the economy, but it's not going to be the long-term fix. You know, it's going to have to happen on the Wall Street end of things.
Eric, we've been down the rebate road before with President Ford. We had one from President Bush in 2001, which really didn't stimulate much. It was the 2003 tax cuts that really did the stimulation. So do these things work at all?
They do, but they're very short-lived. I mean, you give people the ability to spend quickly, and they spend. And what it does is kind of puts a floor in the consumer stocks, and the market kind of holds for a while. Longer term, they don't really work. What really works is cutting taxes. Like you said, the Bush tax cuts are what stimulated growth, and the growth in the markets and the growth in the economy is what stimulated the consumer to go ahead and spend like crazy. And that's really what propped the markets up. And I think cutting taxes makes a lot more sense than sending someone a $500 check. But it's better than nothing.
Peter Schiff, does a $300 to $500 tax credit or a check coming from, hey, listen, it's not just President Bush. Barack Obama has some ideas along this line.
Look,
does that work? What works?
No, these are terrible ideas. They will make the situation worse. We got into this problem because consumers spent too much money. We don't need to give them more money to spend, especially when the government has to print it. Remember, if they cut taxes now or give rebates, where's the money going to come from? Alan Greenspan, Ben Bernanke is going to have to print it. He's going to have to buy up all these new government bonds because the government will be collecting less in tax revenues, or maybe we'll spend more on programs. It creates more inflation. It puts more downward pressure on the dollar. Oil prices go up higher. Food prices go up higher. And eventually, it's going to accelerate the bursting of the bond market bubble. And then you're going to see a big spike up in interest rates, which will really be the final nail in the coffin.
Peter, people spend not on what's in their pocket. They spend on what they think they're going to be, or whether or not they think they're going to be employed, and whether or not they think the future looks bright. And right now, yeah, that was a bad number. But however, we're still 95% employed. We're still fully employed, and people will continue to spend.
But that's part of the problem, Eric. We don't want people to spend money. We have to save money. We're spending too much. That's how we got into this mess.
Well, listen, the international consumer can take over. If we slow down in spending, all the Asians with those really, really strong currencies and all those euros with those very good Europeans with strong euros will spend, and they'll spend here, and they'll prop
I agree.
Our market.
Foreigners are rich. They can spend. Americans are broke. We can't. They can start enjoying their wealth. We have to start suffering.
We're not quite at the
poverty.
point where we just have to rely on foreigners coming in and spending money here, are we?
Well, that's not going to
Hold on, Joran, go ahead.
I think the government can stimulate the economy, but not in this way. What the government needs to do is repeal Sarbanes-Oxley. What the government needs to do is cut government spending dramatically so they're not printing as much money. They need to do away, reduce the national debt, start paying back bondholders. So the government can do a lot of things to really stimulate, but in real terms, long-term terms, writing a check for $500 is a joke. It'll make things worse. I agree with Peter. But there are things the government can do. That is, there are ways that it can actively remove itself from the markets and let the market take care of this. And get out of violating our rights by massively redistributing all this wealth.
It's interesting. The things that the government can do is to stop doing all the negative things it's already doing. It needs to remove itself from the equation. The government is an impediment to economic growth. The more they spend, the more they screw up the economy.
Yesterday, Peter, I said it was, the Fed cutting rates. Sometimes some people perceive it to be just spreading pancake makeup over an ugly face. But the fact is that pancake makeup comes off. And we've got a situation, Eric, where the Fed keeps jumping in to prop up. Now, if they don't, perhaps we'd revert to what we had back in the 20s, and that would be depressions versus recessions.
100% right, Liz. That's what the Fed is here to do, is to monitor monetary policy. And when the economy needs more stimulus, they provide that in the form of more cash.
And
when it doesn't,
more inflation.
Let's remember the depression was caused by the
inflation is not
Fed.
an issue right here. You're going to talk about food inflation, but that's that's based on the ethanol driving corn prices
You're
up.
on.
If you take
Go ahead.
that
There is
out,
no
you
such
don't
thing
have
as food
here.
inflation. It's inflation. It's expanding the money supply.
Sure,
That's
it's
why
inflation.
prices rise.
It's inflation, and we're in a unique economic situation today where we've got both real inflation and we're heading towards a recession. This is stagflation. And the normal ways in which to deal with this, by cutting interest rates, will just feed inflation. By sending checks is just going to feed inflation. The government at some point has to come to the realization, we the people have to come to the realization the government cannot continue to spend money by borrowing and taxing us, continue to spend like crazy, and we won't suffer the consequences
how
of
is that going to happen? Hold on a second, Gag. We had a Republican president and a Republican Congress who were unwilling to cut back on spending. In fact, quite the contrary. There was more increase in spending with a Republican Congress than with a Democratic one. Go ahead.
That's
Nicole.
why it's going to get
Hold
worse.
on, Nicole. Go ahead.
I think that we have, I think we have acknowledgement on both sides of the fence right now that something needs to be done. But with this stimulus package that Bush is proposing, first of all, we're not going to really hear it till the end of January. We're already, if we continue at this pace, we're going to be in a recession if we have another quarter like we did last quarter. So no real instantaneous fix is going to happen. I think it's going to get bogged down in the legislative process, and the government is going to have a very hard time getting anything passed.
Let me just make a point here. The Dow has turned around significantly, and there are a couple of names I just wanted to quickly point out that are doing quite well. We've got Intel up 2.25%. IBM is up. We also have Hewlett-Packard looking good here, up about almost 3%. And I'm just trying to look for leaders here. Merck is also better, and Coca-Cola. So we've got
international names, Liz.
International
companies
names
that do a lot of
footprint.
business outside the U.S. Peter's right in that respect. But that doesn't mean, guys, that that's the only way to make money, or that's what's going to save the market. What's going to happen is the international consumer is going to come here and stimulate the world consumer and put a floor on this. These are buying opportunities
But
if you're a stock investor.
It's important. What foreigners are going to start consuming is not our products, because we don't make them. They're going to consume their own products, and they're going to stop sending them over here.
Coca-Cola is our product. Hewlett-Packard is our product. Dell is our product. These are our products. We're just selling it to them over there.
Go ahead, you're on.
Yeah, but you have to remember that the way foreigners have money, the way foreigners have been creating wealth, is by selling goods to us. The way the Chinese have created wealth is by producing goods that they sell to us. If we're in a recession, we stop buying Chinese goods, they're going to have less wealth. They're going to have
That's the first time I've
money
disagreed
to
with you.
spend internally.
The Chinese they're not getting wealthy because they sold their goods to us. They're getting wealthy because they produced those goods in the first place. The fact that we're consuming them hurts
But
them.
they have to have a
will be
market
able to
for it.
consume them themselves.
By the way, it's important to mention, Nicole, that buying stuff overseas, where you have value-added taxes of 40% in a place like England in order to pay for their socialized medicine, is very hard to do, and that's one of the reasons why people come here to buy things, because they don't have to spend as much in taxes buying stuff here.
Right, I mean,
It's not all the dollar, guys.
it isn't all the dollar, and it isn't also, yes, there's the tax issue. There's also the fact that we have some better products here. But, one of the things that Yaron just said about, us spending money overseas, I mean, isn't that exactly sort of the rationale of giving people this $500 rebate to stimulate spending?
Listen, I'm seeing deals at the airlines. They're begging Americans to go to London because nobody from America is going
Can't
there.
afford it.
But Americans
Can't
are
afford it.
broke.
Yeah, okay.
Well, it's not Americans are broke. It
Look,
costs
but
so
there's a
much
lot-
to
no,
do
they're
business
costs
over
to
there
pay
and
for
buy
this.
anything. Gang, we thank you. We got to take a short break.
Stay tuned. So, as he mentioned, Goldman Sachs, add them to the doom and gloom crowd predicting a recession.
They said it's either that we're already in the beginnings of a recession, which is 2 down quarters, or we're going to be there soon. Now, they suggested if we go into a recession, that it's going to be a relatively mild one, 3 quarters. And again, this is just a prediction. There are other people, as you mentioned, David Malpass from Bear Stearns, who said it's going to be bad, but it's not going to be so bad as a recession.
Yeah, he said that we would skirt a recession. So Bear Stearns has a different opinion than Goldman Sachs. Doesn't surprise us, though. But, okay, one of the economic calamities that Goldman Sachs predicts includes a 6.5% unemployment number by the year 2009. Now, that would be pretty serious.
It would. Of course, they also see the Fed slashing rates to 2.5%, which would benefit Goldman Sachs. Are the company's predictions prophetic or self-serving? Let's ask our panel. Eric, I'm shocked to even suggest that they would think of serving themselves in these predictions.
Listen, the smartest guys on the street, it really worries me that they would predict a recession. I don't think we're going to have a recession. We're in a presidential cycle. The Fed is lowering rates. They'll continue to lower rates. And typically, we don't go into a recession during the low. It helps us when we're already in a recession to come out of one when rates are lowered. We don't go into it with lowering rates. I think we're going to be okay. I don't see a 6.5% unemployment number. By the way, I think that number, that 5.1% from the last report, will come down. I think that'll be revised. I think that we're going to get under 5% again. And by the way, guys, I think Bernanke is going to come and make a surprise rate cut, and I think that's what you're seeing in the stock market today.
Peter's going to hate that. Peter.
Well, first of all, Goldman doesn't always get it right. In mid-December, they said that the best investment for 2008 was going to be shorting gold stocks, and that's probably the worst investment so far in 2008, being short gold stocks.
2008 ain't over yet.
Yeah, well, I know, but we'll see. But as far as the recession, I think they still have it wrong. They say the recession is going to be mild and over by the end of the year. They are completely off the mark. This recession is going to go on for years, and it's going to be the most severe recession we've ever lived through.
Well, by the way, Peter, we are saving this tape. You realize that. We're going to play this tape back.
By the way, you can replay Peter. Peter's been saying this for the last 10 years.
If you want to look at what I've been saying, go to YouTube, look at my clips. I put my clips and my accuracy for 3 years up against anybody.
Okay, Nicole.
Go look at them.
Can we
the
go
record
to
is
unemployment
clear.
for the moment? Eric believes that things will be okay, but here's my concern. So much of the market is psychological. You'd agree with that, Eric. When they start to hear these reports from Goldman Sachs, that big CEOs start laying people off or simply shutting down on hiring. You saw the monster employment index was extremely low this time around. This gives us an indication of employment. And it just makes me wonder if it's not all psychological and that is alone enough to slow things down when it comes to hiring.
I mean, I'm not as optimistic as Eric is. I would like to be as optimistic as Eric is, but I'm not. I think that there is the psychological impact, and there are some real numbers out there that show that companies are going to do what they can to sort of batten down the hatches and keep costs low. I mean, you can see that already in marketing and advertising spending, one of the first things to get cut from companies, and also in hiring. So, yeah, I mean, I don't know if it's going to hit that 6.5%. That does seem rather drastic and dire, but,
Dire? Put a 1 in front of the 6. That's dire.
16. By the way, Eric, you threw something out. I don't want to let it pass before examining it a little more closely. What makes you think that we're going to have a pre-meeting rate cut?
Well, I think Bernanke realizes he has to do something. These numbers aren't great.
Is there any information? Is that the word on the street?
I think when a market trades the way it did today, where you see a big washout and you see some technical numbers getting taken out on the downside, typically you see follow-through. When it reverses itself like that, usually there's an impetus, and maybe it's some sort of, Wall Street people talking about potential, but this has been passed around for a while. This isn't new, and I really think... I think there's more to this than just a rumor.
Joran, we just heard from Charles Plosser the other day, one of the voting members of the Fed, who said, you know what, I'm way more worried about inflation right now. I mean, you start hearing from people like that, and you begin to wonder if there's that much dissension among all of the members of the Fed, will we see an intraday meeting cut? Intra-meeting cut,
I wouldn't be surprised. I wouldn't be surprised. I think we're going to see Fed cut aggressively. I think we're going to see them cut aggressively because inflation, in their mind at least, is still a distant threat, and the actual pain right now is the pain of a likely recession. So I think they'll buy the short term, in a sense, by trying to avoid a recession. I don't think they'll be successful, but they'll try that. And, we'll pay for it with significantly even higher inflation than we have right now down the road. But I expect the Fed... It's a short-term thing, but I expect the Fed to cut interest rates.
Peter, I know you want to get in, but I want to go to Nicole for a second, because Goldman Sachs also said, almost as a postscript, despite our near-term concerns of a recession, we're quite optimistic about the economy's longer-term prospects. So they see brighter times ahead.
Yeah, I mean, I think Goldman Sachs made it very clear that they don't see this as some kind of prolonged event that's going to, kind of paralyze the economy over the next couple years or 3 years. And going back to the idea of it being self-serving for Goldman Sachs, I mean, they are a bank.
I hope it's self-serving. It should be.
Of course they're going to do things that are self-serving. I mean, they are trying to make a profit, and they are smart people, and they're doing their research, and, they're going to back it up with whatever investments.
Eric, we're hearing from people who are emailing the show saying we're in a bear market, and we should just stop trying to act like we're not.
Well, we're in a housing recession. We're in an auto recession. But we're certainly not in a market recession, and we're not in a bear market right now. Buy this dip. Just go in there, and if you're in for the guy who
the dip, by the way, has gone the other way. The market is up 124.
We'll be right back.
It's an exciting day. We're just minutes away from the close of the trading bell. It's been up, it's been down. Right now, the Dow Jones Industrial Average is up about 100 points. The NASDAQ is up 23 points. Percentage-wise, that's an even bigger jump.
You know what I would love? I would love if we had one of the horse racing guys who call it, and down the stretch they go. I mean, this has been that kind of day where we were down double digits and now we're up triple digits. And this has seen us through an intraday trading low of the day that we broke through, that was set back on August 16th. And then the market turned higher once we broke through that level.
So what can we take away from today's activity? Let's throw that back to our panel. I'm going to go to Nicole first because, Nicole, you've been relatively calm about this market, taking the easy side that, yes, we could go into a recession, but if so, it's not going to be a terribly deep and dirty one.
Well, I think my rationale is always that people are in for the long haul anyway. So, you know, if you want to buy on some dips, as Eric said earlier, and get in cheap, that's great, as long as you have the idea that you're going to hang on to these things.
Is that what's happening today, though, when we saw that down and then suddenly activity and the market going up, people were buying in the dips?
I imagine that that's definitely part of what's happening here. I think also a lot of conflicting reports. You know, you have the recession reports and then you have earnings to think about, and there's a lot on the plate right now.
Peter, we've seen a market that's been very volatile today. How do you play volatility?
Well, remember, this is a bear market. That's why you don't want to call it a correction, because a correction assumes that we're still in a bull market. So the corrections in this market are going to take the form of rallies. So whenever the market rallies, let's say it gaps up tomorrow to follow through with today's up move, instead of being exciting about it, people should take advantage of that gift to sell into it. The market is going a lot lower. And people have to understand that so they know what to do. I mean, you say, well, people are in it for the long term. You can lose a lot of money in a bear market being in it for the long term, especially if you take into account inflation. You know, the bear market that lasted throughout the 1970s was brutal. In 1966, the Dow was 1,000. In 1980, it was still 1,000, but the consumer price index more than tripled during that time period. People lost a fortune waiting out that bear market. Don't make that mistake this time.
But, Eric, during the 1970s, we had some antiquated economic policies in place. We've changed things around quite a bit. We've had a tremendous increase. Hold on a second, Peter. We've had a tremendous increase in productivity. That is, the whole computer revolution has happened since then, so it's become a lot cheaper and quicker to make things than it used to be. So hasn't the situation improved since then?
Yes, we're more productive, we're more employed, and we have a Fed that's vigilant on inflation and freeing the system up, allowing the system to work. And they inject funds when they need to, and they take them out when they're able to, and the system works. And by the way, Peter, I remember you telling me we were in a bear market a long time ago, several thousand Dow points ago.
We have been. Look. Price the Dow in any other currency, price it in gold. This is a bear market. You've got to figure that out. You know, the difference between the 1970s is now, hold on, in the 1970s, we had a trade surplus. We did make things back then. We had a much better economy back then. Okay. We had a
better economy in the 70s when we had inflation
now.
in double digits and interest rates up close to 20?
Yeah, we have inflation at that level right now. We're just not reporting it accurately.
Okay, hold on.
If we had the 1970 CPI, you'd see it.
You're on. Can you make some comments here? Do you agree?
Well, what you're seeing here is the fact that there's enormous uncertainty about where this market is heading. There's enormous uncertainty in the markets about inflation. There's uncertainty about whether we're heading towards a recession or not. You know, whether we agree with Peter, it's what the market right now is expressing the fact that they don't know what's going on. And what you're going to see is continued volatility. You're going to see intraday movements like this frequently into the future, and you're going to see big movements down and up until there's more information, until it either settles in the doomsday scenario that Peter has, or it turns out to be something milder. Until we have more information, you're going to see a lot more volatility.
By the way, Peter, if you want to go back to the 70s, I understand Jimmy Carter is still interested in the job of the presidency. Maybe we could get him back in to run again.
Look, since 1999,
well, we might get a look-alike.
Since 1999, the Dow has lost 65% of its value priced in gold.
Peter,
that is a huge bear market.
One quick thing. What's the best time to buy stocks historically? Right now.
Well, I will be buying
Right
stocks when the
now.
Dow Jones, when I can buy the Dow Jones for 1 ounce of gold.
Okay,
That's
hold
when they're
on.
going to
I
be
want to
cheap.
go to Tracy. She's on the floor of the New York Stock Exchange. And Tracy, we've had a lot of movement here today.
It was actually a fun day down here. I don't think the traders will agree with me, but I thought it was pretty fun because there was news on top of news. Want you to note, though, that the market turned around right about the time that Warren Buffett said that he would be interested in buying the insurers, and that's kind of when this whole uptick started again. Now, MBIA reacted a little, AMVAC reacted a little. It wasn't enough to carry those stocks out, but it certainly helped some of the other financials, which are now up. JP Morgan, Citi, those guys are in the green now. So there's something about the fact that the Oracle of Omaha speaks, market reacts. Basically, this means the market is looking for guidance here. It's looking for someone to say, we're done. You know, we talked earlier with Jeff Frankel about the fact that people are selling their mutual funds. Unfortunately, the average Joe is selling a little late, which is not surprising. This happens all the time. But maybe the fact that the average Joe is now selling is a sign that maybe we are almost out of this. And call it what you will, bear market, recession, whatever. This market is just a lot of little stories, and
Tracy,
you can find pockets somewhere if
We
you
want to
look.
get the closing bell, so we got to say goodbye, but we'll be right back for that closing bell.
It's just around the corner. Stay tuned.